What is EWA and how did it start?
The need for on-demand access to pay has always been there, but the ability to pay on demand was not always there. And that non-salaried worker is really the main character in today's economy. There's gig, there's contractor, there's hourly. They want to see the fruits of their labor after they've completed a task.
One thing you're discussing here is how EWA fits with other financial products. Maybe double down on that.
Employees don't want to be utilizing earned wage access forever. It's a means to an end. How do you move from needing your wages on demand so that your heat doesn't get turned off, leveraging those wages to build credit, and having access to credit and to build financial acumen is super exciting for me. I think it just opens up a door that hasn't been there before. The success of on-demand pay is really not just the delivering of that initial payment. It's what happens from there. I see in 5 years on-demand pay being ubiquitous.
Hello everyone, my name is Nico Simko. I'm the co-founder and CEO of Clair, and I'm also one of the co-hosts of HR Tech Trailblazers. Today we have somebody amazing with us. Her name is Lauren Fulmer, and she's the Senior Director of Wage Access and specifically Earned Wage Access at Visa. Lauren, welcome to HR Tech Trailblazers.
Thank you for having me. I manage everything from payroll processors to payroll card issuers to earned wage access providers, financial wellness, everything in between. So some are hyper-focused on one audience and others are, looking to meet the general needs.
Talk to me a little bit about your background and how you ended up in that particular seat.
I wish I had a really good story to tell you that was like one day I was, somewhere, but it kind of just fell into my lap.
Okay.
I've been in payments for 20-ish years, and I started actually on the banking side of things, and one of the things that we managed was payroll cards. So I had a bit of background in wages from there, and then through my career, I kind of took and built on that, eventually ending up at Visa. I started at Visa in the product team.
Okay.
So I worked on the debit and prepaid product team, and one of the products I managed was wage. So payroll, that was when debit was just coming into moving from traditional debit, we called it alt debit at the time,
Wow.
and or alternative debit, and it started being, okay, we're not going to be this. We're not just traditional financial institutions, but
Right.
Others are going to issue debit products. And from there, I started to notice some trends, looking into doing a lot of research within, back to what I said, the end user and understanding who that end user is, that an underbanked user. And so as earned wage access started to grow, and the space started to grow, there became a need on the client management side to kind of take that over and take the product knowledge that I had and applied it to how we could expand and grow.
Lauren, you've been in the EWA space quite a while. For the audience that has not necessarily heard about EWA, what is EWA and how did it start?
Yeah, so EWA, I see, is essentially a response from the industry solving a need for employees who needed financial access to their funds. It's really, not to simplify it too much, but essentially that's where EWA stemmed out of. And I would say that earned wage access as a concept is not anything new. I look at employers who would give advances to their employees here and there when they needed it. I actually have a good friend who owns his own business who still has employees. They work on a commission-based schedule. It's uneven pay. They don't know what to expect or when to expect it. And sometimes they need their pay before it's actually accessible. So that's really how I see the birth of EWA.
Who were the first players when this was getting started, who were the first players to create to come up with the concept?
Ooh. I think it depends on who you ask. The need for on-demand access to pay has always been there. That is nothing new. But the ability to pay on demand was not always there. And so real-time payments, instant payments, payment networks like Visa Direct have really enabled the ability for those to get paid in real time. And I see that as a differentiator, as a way to transform the market.
That makes sense. And so Lauren, one of the things you and I talk a lot about is the world of employment has evolved. Whether it's during COVID, people work more from home, whether it's industries flourishing while others kind of slowly disappear, while many employees out there have multiple jobs. So, from your standpoint, what do you see happening there, and how is that impacting the world of payments?
So we've really shifted from this idea of a 9 to 5 salaried worker to this non-salaried flexible worker. And that non-salaried worker is really the main character in today's economy as I see it today. And actually, I believe it's growing exponentially faster, I think 8 times faster than the salaried worker today is the non-salaried worker. So there's an extreme bit of growth, which if you look at the way in which we work and how we want to get paid, tied with that growth, here you have a great big opportunity to impact that.
And for those who don't know how non-salaried workers expect to get paid versus salaried workers, what is the difference there?
Sure. Well, salaried workers is a typical typically two week pay cycle, or bi-monthly, every other week. Gig workers, contract workers, they work and they get paid for their work. It's immediate. And there's a method to their madness there. They want to see the fruits of their labor after they've completed a task. And ultimately, if you think about it, we all work, whether you're salaried or not, we earn money. It's just having access to that money. And I think when you think about a salaried versus a non-salaried worker, you're ultimately just saying, when are you going to receive those funds?
How do you see that impacting your space of faster wages, wage disbursements, earned wage access? From the statistics that I know, is earned wage access is still a pretty niche category. It's only evolved over the past, I would say really started to grow the past 5 or 6 years. We're now starting to be in double-digit percentages of market share for businesses that are offering this or consumers using this. What do you think this change of employment does to, again, faster wages, earned wage access?
5 years in payments is like 50 years anywhere else. So I know that it's short, but a lot happens and a lot can change very quickly. And the advancement of technology and the optionality has certainly created that environment. Your question was about employers?
Yeah, it was basically saying there is now a discrepancy between how certain people in the non-salaried space get paid, and then you have an enormous amount of people that are also salary paid. So this seems like there's a dichotomy, like a separation between how certain people expect to get paid and how the traditional economy works. And I'm sensing is like, okay, if we fast forward 5 years, how is this wage disbursement world going to evolve, right? If we had a crystal ball and we were able to sit down with all the providers in the market, how do we think wage access and wage disbursement is going to be evolving?
If I had $1 million for every time I got asked that question, I would be really I'd be really well off. But it is a really good question, and I think candidly there is answers all across the board for where we'll be in 5 years. Personally, I feel like there will be an opportunity to have some convergence and unification within solutions to bring it all together, to deliver seamless, flexible options. Do you want to receive your wages every 2 weeks? Do you want to receive it every day? We can do both. I mean, certainly there's limitations within the existing systems, payroll systems that we have today. When you start to look at taxes and regulatory controls and all that's in place, there's a reason why we are paid every 2 weeks. There's a lot that goes into that process. But that doesn't mean that you're, as we've said before, that you're not earning as you go. And you shouldn't have access to that money either. So I see in 5 years, really on-demand pay being ubiquitous. However, I think some will say, we're all going to get paid whenever we want. I do think that there's a group of people that says, don't give me my money every day. I'm good with the 2 weeks. That works well for me. And I think that that's an opportunity for everyone or for employees to get there. Essentially, EWA is just one tool in a toolbox. You don't want everyone, or employees don't want to be utilizing earned wage access forever. It's a means to an end. And so I really see the 2-week pay cycle sticking, but giving consumers and employees options. So they'll have the ability to access their pay when they want it, and they'll also have the ability to get their paycheck every 2 weeks if that's what works for them.
Thank you for this. I think one follow-up question to that one is, if I'm a consumer and I want to be able to flex my pay, some employers, not a majority of them today don't, but some employers have solutions for this. But then there's an entire market of consumer products. For people who don't know what the difference is, what's the difference between a consumer-based, faster wage access solution versus an employer-connected one?
Great question. And there are so many options. And some are available to you through an employer. Some are available to you without your employer relationship. And that can absolutely get overwhelming. I kind of break it into two. You have the employer integrated model and the direct-to-consumer model. Taking direct-to-consumer first, does not require you to have any relationship with an employer. It allows you to have access to your funds on demand when you need it. And the decision, it's more of a risk-based model, so those decisions are made based on third-party data or self-reported data. Sometimes there's open banking involved in there. There's employment verification that give insights and allow to see the money that's coming in and out. But ultimately, the service is taking on the risk of saying, this is how much money you made, and we'll give you access to a percentage of that. Employer model is employer integrated. I see there's kind of two different flavors of that. So there's the direct to employer model where you have an earned wage access provider who is integrating directly with an employer, whether it's a small business or an enterprise level employer, and they're doing that one by one. They're going in and creating those relationships. There's also the ability to embed or integrate into the platforms, the time and attendance systems, the payroll platforms, the workforce management that are utilizing, that the employers are utilizing. And so, for example, like Clair, having the ability to go in and embed, and then there's a seamless access within that workforce management system or tying into the payroll time and attendance system that still is a risk-based approach, but gives you access into actual data of how often a person has worked. Actually, it's kind of cool. Some solutions can give you access down to the minute or the hour. You can actually see a ticking clock of how much you've earned, which is very cool. So that's really where I see the differentiation between the two. Although I will say, I see some convergence between the two. So employer models, definitely the prominent model today. Direct to consumer really tend to fall either in the financial wellness space as it is today, or or like I said, outside direct relationship with that consumer. But those two models are really coming together. It's saying we can meet the needs through your employer, we can meet your needs directly, we can meet your needs through a platform that you are working with. So again, optionality and flexibility is really the name of the game. And how do you tie that in whichever way works for the employer and the employee the best?
That makes sense. And so one thing the concept that you're talking about is the concept of conversions. It's that there are so many different EWA solutions of different go-to-market, different flavors, and they're kind of like slowly converging together, like we're seeing the same thing. Talk a little bit about the concept of consumer choice. There are models that require a card. There are models that don't require a card. What are you seeing from your standpoint around the models that are working the best? What are consumers saying? What are employers saying? What are platforms saying?
There's a lot of optionality out there. Consumer choice is really important. Giving the consumer the ability to choose how and where they want to receive their funds is really the value in earned wage access. And personally, I feel that that's where the industry is going. That's the flexibility and the optionality is essential. Whether it's your bank account or a card or a wallet, these consumers typically don't have one place that they're spending or one account that they're using. They're utilizing different accounts for different means of spending that they have. And so I think giving them that option of how fast they want to receive it, when they want to receive it, and where is really important. The other piece that ties in with that is the fees. There is a cost associated with how you want to receive that, and it may not always be the same. So I see that as important as well. I think that there's been some great products that have come out in the card space, whether it be prepaid or debit products or credit products that really can support earned wage access. As I mentioned before, earned wage access is just one tool in the toolbox, but once you have access to those wages, what do you do with it? And those wages need a place to land. And so I think having a solution in place for that is important, and you can layer a whole bunch of financial wellness tools on top of that. And then you look at a product like a credit product. Again, getting access to your wages on demand may not be where you are forever, and building that credit will allow you, again, flexibility and optionality to utilize that when you need it. And so products like that also complement earned wage access really well.
One thing you're discussing here is how EWA fits with other financial products. Maybe double down on that. Where do you think EWA will fit over time with other financial products?
I see EWA as just one stop on the payments journey, or I should say, one stop on the financial journey. And typically, it's a beginning stop. But where do you go from there? And so working with a lot of these wage FinTechs, they're looking to solve other steps of that journey. How do you move from needing your wages on demand so that your heat doesn't get turned off to having access to credit so that you can utilize that when you need to pay a bill or purchase an unexpected expense? And I see that happening in quite a few different ways. Everything from a bank account and the financial tools that come along with a bank account. I see that really as a holistic financial wellness package that is saying, we're going to give you access to your funds on demand, but in addition to that, we're going to help you with budgeting. We're going to help you have insights into when your next payment is due. really that future planning. And then in addition to that, we're going to allow you to use those wages as a way to build your credit, because otherwise, what tools do you have? There can be savings tools, there can be credit building tools, and then even from there, future on unsecured credit products, and more towards the end of the financial journey, and investing, and I see fintechs really meeting. Some are trying to meet all those needs, and some are focused on a specific piece of that journey, and they all are really, really important. But I would say the success of on-demand pay is really not just the delivering of that initial payment. It's what happens from there.
Yeah. What is some of the product constructs, and this is less about names, it's more about like concepts that you've seen that really got you excited, or is getting you excited currently around where the wage access space is going to flourish from a product construct?
I think the product or the concept that gets me excited the most is around credit building. I think that there's a great use for credit when it's available to you. And the challenge is getting to that point when it's available. And how do you do that? If you're living paycheck to paycheck and you don't have enough to put in savings, it becomes a challenge to build that credit. And quite honestly, many people are just adverse to it. So this concept of having access to your wages, leveraging those wages to build credit and to build financial acumen is super exciting for me. I think it just opens up a door that hasn't been there before, and it allows us to think about it differently. If you think back to even 10 years ago, you had a bank account with a debit card attached, and you had a credit product. Nothing sat in between. And now there's all of these financial tools in between that can help you get from point A to point B. EWA is one step and one feature that allows you to start that journey. The products and what you do with it is just another to help you build on that. So that's really the most exciting for me. I think that it just opens up doors to a lot of different avenues that weren't necessarily there before.
Let's take a step back. EWA cannot be built in one standalone entity. It requires a lot of partnership between different entities in order to come to life. Talk to us a little bit about what's going on in the EWA space as it pertains to partnerships for that category to flourish.
Thanks, Nico. This is a really exciting area for me, and ultimately my role and what I try to do is make those connections. And so there's an endless amount of opportunity here when it comes to partnerships. I mean, if you break it down, you can look at the partnerships between payroll systems, time and attendance, and just having access to information and data. There's also open banking, there's AI, there's a whole employment verification. There's a whole host of partnerships that can just give you access to information. Once you move beyond the information and how you look at how you service that consumer, and there's another great opportunity in partnerships of how that consumer is serviced. Here I think about work tech, HR management platforms, payroll processors. It used to be, I'm going to process your payroll, I will give it to you in 2 weeks, I will make sure, employer, there's no issues with taxes and all your needs are met, and I've done my job. And now there's opportunities within on-demand pay, there's opportunities with financial wellness to create this seamless, unified experience that can not only deliver the wages to the employee, but can support them outside of that with how they're used. We've created quite a diverse workforce. There's the salaried worker, the non-salaried worker, there's gig, there's contractor, there's hourly, there's those who need to send funds internationally, home. There's a variety of needs, which has created a variety of opportunity for collaboration. And I see lots of opportunity for FinTechs to collaborate with employers, along with even traditional financial institutions, to come together and solve the challenges that this diverse workforce has.
Well, let's actually talk about remittances for 1 second.
I can't believe I didn't mention remittances before. That is also one of my passions.
So you and I have spent, off record, multiple conversations, because you and I believe we believe one thing strongly, is that accessing wages, whether it's on the regular schedule or faster, is to actually make sure that people abroad are able to potentially pay their bills on time, or even if it's just celebratory, that you're able to celebrate a life event like a birthday at a pace that doesn't take a full week for money to process. I've been lucky enough to interview consumers, employers, and it looks like access to pay also has an international component of it. So what are you seeing in the market, and how is potentially Visa working on, international wage access?
Yeah, this is an area I'm really passionate about, and I think somewhere where we have just started the journey and have a lot more opportunity to grow. Certainly we see within this space, those that are leveraging on-demand pay, a great need to send money home or to send money to another country. And right now, that process tends to be clunky and it tends to be expensive. And Visa Direct, which has global reach, has a wonderful opportunity to be able to solve that need for individuals. How do we take these funds that you're accessing, you need to remit, and create a unified, easy experience that's also affordable, and that's essentially something that Visa Direct can empower and is doing and has started to do with some of our clients today. In the research that we've done and the trends that we have seen within this market, there is a really big need for the capability to send funds internationally and to do so easily and quickly.
Yeah, and say more about that. Now let's talk reach for a second. Visa is a global brand, but for those who don't know, assume your Visa is able to connect to all wage access solutions around the world, and all consumers are able to remit funds globally. How far is Visa's reach in terms of currencies and cardholders?
Visa can reach over 3 billion cardholders in over 150 currencies, which really expands the reach globally and allows us to meet the needs of a variety of employers and consumers.
Perfect. Thank you so much for being here. Thank you, Lauren.
Thank you for having me.